Property prices in Dubai just got secretly cheaper. But only if you're buying from Europe, the UK, or anywhere else with a strong currency in 2025. Why? Not because of price drops. Dubai prices are still holding very strong, but because of something way more powerful: currency advantage. This is one of the rare moments where timing, macroeconomics, and property investment aligns perfectly. So if you're thinking of buying property in Dubai, don't blink. Let me explain how this works, why is it happening, and why it won't last. Hit that thumbs up button and let's get into the video. In 2025, the US dollar saw its sharpest first half drop since 1970s, falling more than 10% against the major currencies according to Reuters. Because the UAE dirham is pegged to the dollar, it also fell, meaning that the price of Dubai real estate also decreased in many terms, or in relative terms for the international buyers. If you hold euros, pound, yen, yuan, congratulations. Your money now goes much further in Dubai. So let's take a real-world example and see how much you are saving on this. Let's start with a Dubai apartment priced at 4 million dirhams. In January 2025, €1 equaled 3.96 dirhams. So that apartment would cost you, in euros, 1,010,000 euros. In June 2025, €1 actually was 4.37 dirhams. So now that apartment will cost you only 915,000 euros compared to the previous currency rate. You just saved 95,000 euros on a property without even having any discounts. For pound holders in the UK, similar story. £13.2 million villa in Palm Jumeirah earlier this year is now £12 million, £1.18 million saved just because of the currency rate. Quick note, if you're thinking of entering this market in this unique window, make sure that you work with an agency that knows how to read the numbers, not just sell you the dream. One of my newest agency partners, Silver Springs Properties, just does exactly that. Founded by Nazir, who has a successful financial background back in Singapore, Silver Springs specializes in data-driven, investor-focused deals. No hype, just facts. If you want transparency, a strong analysis, and access to properties with real upside, reach out to them via the link in the description. So why is this happening? Actually, a few things are causing this currency exchange fluctuations. There are US fiscal policy shifts and interest rate cuts. Global capital is also rebalancing across the emerging markets. There is also a lot of uncertainty around the Middle East conflicts, although I don't think this is the major thing that impacts that. And besides that, there are also oil reroutes and investor inflation hedging. And because the dirham is literally pegged to the dollar for many years now, this is impacting Dubai directly, which ironically makes its real estate cheaper and way more attractive for the foreign investors specifically. Moreover, lower borrowing costs might be coming, and here's why. According to Reuters, key US Federal Reserve officials expect 2 to 3 interest rate cuts by the end of 2025. Since the UAE dirham is pegged to the dollar, the central bank of the UAE is likely to follow suit. In fact, as of now, the UAE's overnight deposit rate sit at around 4.4%, mirroring the US monetary policy. So if the expected cuts happen, the UAE lending rates could drop to around 3.85%, making home loans, refinancing, equity release far more attractive. As reported by Khaleej Times, this could be a game changer, especially for those who are looking to lock in better interest rates, restructure mortgages, or just invest while credit is more affordable. Another point is that Dubai fundamentals are super strong still. It's not just a forex fluke. Dubai's real estate fundamentals are solid. Average yields of 6 to 8% tax-free on cash investments. Tourism and population growth is still climbing. Visa reforms that attracts long-term residents with an actual long-term strategy in Dubai. Major infrastructure changes and still limited supply in some of those best segments. So especially as a foreign investor, if you're combining a weak currency plus a very good property market, you're looking at a very rare alignment. So why are investors still rushing in? For foreign investors, as mentioned, this is the ultimate trifecta. Lower effective entry prices due to better foreign exchange, strong rental yields plus appreciation versus some of the Western countries in Europe or even in the US, and of course political and regulatory stability, which you don't really see anywhere else in the world but a few limited countries. Developers are actually reporting more inquiries from Europeans, UK nationals, and of course from the Asian side, China, India, and Japan. On the other side, while you know probably that I don't really like the off-plan pricing nowadays in Dubai, and I don't want to sound somehow biased that I invest in here, to my surprise, even throughout this summer, the prices weren't really going down. And I've seen this for myself, for my clients, and for my friends as well. While there are, of course, a lot of really good deals, distress sales, some cancellations that we're always getting for our portfolio and for our clients, there was less negotiation and the sellers were really much more firm during this summer versus the past few years. Nevertheless, this advantage might disappear soon. That's exactly why I emphasize on acting quicker. The dollar could and most probably will rebound, or just Dubai prices keep climbing, neutralizing this FX discount that you currently have. And don't forget, currency swings can go both ways. Can be completely a different story, and the prices of the property in Dubai might become actually way more expensive if the dollar rebounds and continues to grow. You might lose that edge overnight if the dollar rebounds. So while this isn't a call for panic buying, obviously, it's still a signal to act fast and smart. History shows what happens next. All these things aren't new. In 2002 until 2008, the dollar actually fell by 40%. Oil prices surged and the Dubai property market boomed. In 2014 until 2017, the dollar got very strong again, and the Dubai real estate market softened. Currencies aren't the only driver, but when the dollar is weak and the Dubai real estate market is strong, smart money moves in. Sellers' market is also heating up. It's not just buyers benefiting. For current owners and sellers, there are quite a few good benefits and implications as well. Increases the resale value, improves the liquidity, and encourages faster cycles. More capital, more movement, more resilience. So what's my take? In one phrase, this could be the moment for you. If you've been thinking about buying in Dubai, especially if you're buying with pounds, euros, or other strong currencies, this is the moment. And I'm not just saying that because I invest in the market and I offer services across the market, but I actually do think so because you are getting something at a pretty good discount of maybe 10 to even 20%. I've personally helped so many clients this year to save thousands when timing the market with this currency fluctuations, but it won't last. Timing is everything in real estate. And this one is one of those rare currency-driven windows that you don't want to miss. Finally, if you need help analyzing the buyer power and how to enter this market strategically, book a one-on-one call with me today. We'll work through your numbers, your timeline, and whether this currency window actually works in your favor, and then you will be able to decide. Link in the description. Don't miss this opportunity to act on a rare moment where you can really use this currency fluctuation to your advantage. And with that, I hope you found this video helpful. As always, please leave a thumbs up, subscribe to see more of these videos in the future. And with that, I will see you in the next video.